Thank you, Haley. And thank you, everyone, for joining. Welcome again. Glad to have you with us. This is Angela speaking. I'm a principal analyst at TBR, focusing on our IT infrastructure research. And I'm also joined today by my colleague, Jacob Fong, who also covers the IT infrastructure space. So the content we're going to be discussing today comes from two of the research products in our portfolio. So first, we're going to be talking about recent performance of vendors in the server and storage space. That's really focused on our IT infrastructure benchmark. Some of you may formerly know that as the data center benchmark. So that is research that looks at kind of the previous fiscal quarter in terms of financial performance within servers, storage, networking, and close-to-the-box services. After that, we're going to take a quick peek at some of our projections from our IT infrastructure market forecast. That's research we publish every spring that looks out at our financial projections for the next 5 years in the same segments. So as I'm sure many of you are aware, vendors in this space all report their financial data differently. So in TBR's benchmarks and forecasts, we do some of our own modeling to do the very best we can to put these vendors in a comparable way in terms of looking at their financials using TBR's own taxonomy. So if vendors don't report some of these figures, we make our own estimates in order to create these benchmarks and forecasts. So with that, we're going to jump into looking at recent performance. So that would be fourth quarter of 2021. I know coming up in the next 2 weeks, we'll see kind of a flurry of earnings releases from many vendors in the space. So now we'll just kind of do a quick recap of what we saw in the last quarter, and I'm going to hand it over to Jacob to kick us off.
Thanks, Angela. So I'm going to start off by talking about the fourth quarter performances of some of these covered vendors. And in the fourth quarter, we saw for the industry standard or x86 server OEM market, we saw 3 or 4 primary competitors in the segment, with Dell leading the way in market share, followed by HPE, Lenovo, and Cisco. Something that you might notice from this chart is that Huawei is no longer visible, and that's because they exited this space last year, being unable to secure Intel chips due to U.S. government sanctions, ultimately blocking them from a critical component needed to assemble these x86 servers. So Huawei ended up selling their server business to a Chinese consortium, and at this point, their server revenue at $5.4 million is essentially negligible, and it's basically just residual revenue that will soon cease. In terms of growth, we saw that Lenovo was a leader in 4Q21, followed by Dell and NEC as the only other vendors to show positive growth in the quarter. The rest of the vendors, notably HP and Cisco, declined in market share during the quarter. As you can see from the distribution of vendors, there appears to be a negative correlation between revenue growth and gross margin, which points to the commoditization of industry standard servers and how much margin may be tied to discounting on sales volume. And so if we go to the next slide, you can see that the overall industry of the server market declined by 6.3% in revenue. However, if we exclude Huawei, we see that their exit had a profound impact on the industry growth rate as a whole, as excluding Huawei's revenue was up 3.6%. During the quarter, we saw that vendors have turned their focus a bit to enterprise edge compute and 5G telecom infrastructure, as 5G network rollouts by telecom companies presents a large near to midterm opportunity to participate in 5G network rollouts by telecom companies. And this is because 5G base stations require compute infrastructure, and so we see some of these vendors, providing some of this infrastructure. And we did see that vendors such as HP, Dell, and Lenovo all introduced edge and telecom offerings in 4Q21. Looking at the market by market share by revenue, as I mentioned earlier, Dell is the clear leader with $3.1 billion in revenue, followed by HPE with $2.5 billion and Lenovo with $1.5 billion. If we look at the growth rates, Lenovo has been the fastest growing vendor in this space, and the reason is because of their business model. Their growth has been largely tied to their sale to hyperscalers or cloud service providers through their ODM plus delivery model, which allows them to sell customized servers to hyperscalers down to the component level. And this allows Lenovo to participate directly in public cloud growth. One thing to note about this business, though, is that while it's high volume, it's also low margin. And as you can see from the last slide, Lenovo had the lowest gross margin of competitors. And if you look at their enterprise business, it's growing at a pace more or less on par with Dell in the mid to high single digits. Dell grew at a fairly impressive pace for the size of its business, nearing double digits at 9.5%, and NEC grew at a comparable pace, although for context, its business is orders of magnitude smaller than Dell's at $122 million. So with that picture of the industry standard server market, I'll pass it over to Angela so she can talk about storage.
Great, thanks, Jacob. So I'm going to switch gears a little bit and talk for a few minutes about what we've seen in the storage market over the last couple of quarters. So here you can see our revenue growth versus gross margin in the storage segment. Overall, vendor performance was relatively positive. You can see that Pure Storage far and away had the strongest growth among vendors at about 40%. In 4Q, they reported adding over 470 customers, which brings them to around 10,000 total customers, and especially strong demand in the North America market. Then we see a cluster of vendors who are kind of growing in that 5 to 10% year-to-year revenue growth range. So including NetApp, who was reporting strength in their all-flash portfolio. IBM is in this area, up around 5% in their storage business. And Lenovo as well, also growing in line with these vendors. The two largest vendors by revenue size, Dell Technologies and HPE, had a bit more trouble growing revenue in 4Q. Dell was flat while HPE was down about 3%. A little bit of a similar story in terms of how these vendors presented their performance to the market. So both reported strong growth in orders of storage systems. Dell reporting its mid-range PowerStore product line doing really well in terms of orders. But we're not seeing this convert to revenue growth for either company, which I think is pointing to some of the supply and logistics challenges that we'll talk about in just a minute. Another thing you'll see here is that HPE and NetApp are very comparable in size currently. And I would expect, HPE is currently number 2 in storage market share here, but given how these trends play out over the next year, this is something that could potentially change if NetApp continues to have some consistent growth and if HPE does not kind of level out or start growing the storage business. So a couple more comments on just drivers of change in the storage market we saw in 4Q. Very similar story to the industry standard server business. Huawei had kind of a negative impact on our overall benchmarking. So the storage market is at $6.5 billion of the vendors we benchmark. With Huawei in there, you're down almost 5%. With Huawei removed, the overall market would be up 4.6%. So overall, many vendors in the space doing relatively well throughout 2021. Two other, bright spots for both Lenovo's Infrastructure Solutions Group as well as Pure Storage is that, both of these groups or companies are struggling with operating profit. Previously, both reported positive operating profit in 4Q21. So Lenovo as an entire business has been profitable. However, their data center or infrastructure solutions group has not been profitable over the last several years after acquiring IBM's System X business. So with the increasing scale, you see those relatively strong versus peers revenue growth numbers for Lenovo, and also focusing on some of the higher margin, more software-defined solutions in the portfolio has helped Lenovo to kind of break through that challenge and actually achieve profitability with their infrastructure group in the last quarter. Pure Storage, a little bit of a different challenge there, where we've just seen over the last couple of years a high amount of sales expense related to their 100% channel partner focused strategy. So again, with Pure Storage, strong revenue growth numbers and increasing scale has helped them overcome that, even as we're seeing some cost of sales pressures across the market. So while those two vendors did report positive operating profits, I'd say a broader trend through the quarter with most vendors was challenges with cost of sales, absolutely reported to the backlog challenges that we've been seeing across the market. So we see gross margins shrinking a bit with vendors trying to compensate elsewhere in terms of SG&A or other OPEX costs. So most of the challenges we've seen are that when customers are placing orders that take a long time to fulfill, ultimately there's changes in component costs. Transportation costs have increased significantly, so that by the time these orders are actually being fulfilled, some projections have not really played out in the vendor's advantage in terms of how costs have increased. More, I think, than we all could have expected over this time period. So as prices have gone up and backlogs have stayed pretty constant, that's had a negative impact on cost of sales. The storage segment did seem to have more supply issues in 4Q than the server business did. We saw more vendors reporting higher growth rate in server. Storage, again, we heard reports of increasing orders, but not necessarily the same reflection shown in terms of the increases in revenue in some cases. In terms of some of the growth opportunities we've seen vendors capitalizing on, we absolutely see lots of competition in the mid-range storage space, a lot of vendors working competitively to displace peers among their customer base, pushing all-flash arrays, certainly another area that we see vendors focused on currently. In December, we saw both NetApp and Pure Storage announcing new flash arrays targeted towards large enterprise applications like large databases. So we'll expect to see more focus and more detail on how those are performing in the coming quarters. And maybe one of the biggest trends of 2021 would absolutely be the storage as a service offerings and just proliferation of number of offerings. I think almost every vendor we benchmark in the storage space has released some form of a storage as a service offering, whether that's Apex, GreenLake, Keystone, Pure as a Service, TrueScale. We're certainly seeing many of these out there. And compared to some of the other infrastructure offerings in this space, our feedback from our own research in talking to customers and partners is that the storage as a service has a great value proposition in terms of saving customers on over provisioning and just the potential for cost savings there. And we certainly see customers seeing value in that, and we think it's the most popular use case currently for the subscription offerings overall. And kind of as an offshoot of that, certainly an increase in data protection offerings as well, following the initial rollout of the storage as a service offerings. So more and more offerings that are backing up to public cloud vendors and just other data protection solutions, whether those are as a service or not as a service. Certainly another trend where we're seeing vendors looking to drive storage growth and capitalize on that. From here, we're going to shift gears and start forward-looking via our annual market forecast. So again, I'm going to turn it back to Jacob here to take us through some of the findings.
Yeah, thanks, Angela. So before I get into this, I just wanted to give some context on our forecast. So the IT infrastructure forecast is an extension of our IT infrastructure benchmark, where we have aggregated the historical quarterly revenue data from the covered vendors in the benchmark and then project them out 5 years using ARIMA modeling practices to arrive at our forecasts. And from that, we anticipate that the current IT infrastructure market is growing as a whole, and as many IT organizations diversify their workloads across a heterogeneous architecture in the form of hybrid cloud. So one thing to note about these projections is that they exclude numbers from OEMs and rest of market. So we're specifically talking about the combined revenues of the OEMs mentioned in previous slides. The only segment that we have declining over the next 5 years is the proprietary server market, which is currently dominated by IBM with its mainframe and power server sales. Well, we do see a near-term revenue spike with the release of the Z16 mainframe. We believe that customers are slowly migrating away from mainframes and will continue to do so over the next 5 years. Other players in the proprietary server market, such as Fujitsu, Oracle, and NEC, are also winding down their businesses and are even proactively helping their customers migrate to cloud. We have the server market, the ISS market, expanding at the highest pace as emerging technologies increase the demand for compute to derive insights such as artificial intelligence, machine learning, and analytics, and for example. So, and for storage and networking, we also have those segments growing in parallel, although at a slightly slower pace. As people like to say, data is the new oil, but the difference being that data is ever expanding. So the retention, organization, flow of data which enables the analysis, will also grow in importance. So those segments will grow as well. And finally, in terms of services, we see services growing fairly quickly, as well as vendors expand their as-a-service consumption-based portfolios, such as HPE GreenLake, Dell Technologies Apex, and Lenovo TrueScale mature. And OEMs are currently pouring investments into these portfolios and coming out with new offerings very frequently as they present an avenue for them to compete and participate in cloud while evolving their revenue generation into a more modern consumption model that's preferred by customers. And if we go to the next slide, we can take a look at the market share picture. TBR predicts that the IT infrastructure market picture will remain relatively similar through 2026, although we do see Lenovo overtaking IBM and Fujitsu as their IT infrastructure portfolios exhibited strong growth in recent quarters and proved their traction and competitiveness from inside centralized data centers to edge compute infrastructure. Another thing that I wanted to mention that's not pictured on these graphs is specific to the storage market. We predict that there will be significant shifts in the market share landscape, with Pure Storage and Lenovo growing rapidly and eventually overtaking IBM, Fujitsu, and Hitachi, which are currently ahead in that space. And with that, I'll turn it back to Angela to talk about some of the growth drivers that are, as well as inhibitors of these trends.
Thanks, Jacob. Okay, yep. So let's talk through some of the drivers and inhibitors a bit more in depth that we cover in our market forecast. So we have a few of these from the forecast summarized on the slide here, which I will point out a few of these. So as far as the market-wide growth drivers, first one we see is as a rather pervasive trend among vendors is focusing on automation capabilities to help support demand for server and storage markets specifically. So what we've really been seeing from vendors is an ongoing focus on making offerings more attractive in terms of their usability and automation, and really making them more almost a cloud-like experience as well. So less code focused, more point and click focused, easier to operate for individuals who are not deep infrastructure experts, and can automate some of the time-consuming aspects like setup of hardware, provisioning of storage and virtual machines, ongoing day-to-day monitoring and management. These are all absolutely focus areas where we see vendors adding value, adding differentiation and supporting their platforms to make them more attractive for customers. Second one, edge build-outs. Absolutely another area where we think customers demand will kind of support additional growth in the space. TBR is producing a brand new customer research series next week that focuses on customers' infrastructure strategy and investments. And while we do see data center consolidation happening, we're also seeing increased interest in edge and customers continuing to invest in infrastructure in general. So absolutely, we think hyper-converged infrastructure and server form factors will play a big role here. And we've seen Dell Technologies put out a single node version of VxRail specific to edge. I think just last week, Intel announced a small form factor hyper-converged infrastructure system as well. So we see those as well as various server form factors that are either designed to be in quiet spaces, public spaces, rugged spaces, all kinds of form factors that various vendors have been showcasing over the last couple of quarters that will continue to see increased focus and investment over the next few years. Cloud is on kind of both sides of this list as a driver as well as an inhibitor. We see that vendors are taking advantage of opportunities, either as Jacob had mentioned, for example, Lenovo with its CSP business. We see vendors increasingly partnering with public cloud providers in terms of providing greater integration, providing software within cloud marketplaces, and building broader hybrid cloud platforms. So we see all of these as opportunities for vendors to embed themselves in customer ecosystems. At the same time, obviously, we certainly see attrition as customers increase usage of public cloud or adopt SaaS alternatives to applications they've hosted on-prem in the past. So both a driver as well as an inhibitor in the case of cloud. And another one Jacob has mentioned already, but growth of data is clearly going to be a continued driver for server and storage consumption. When we survey our customers, and then in the research we'll be sharing next week, there's still a strong expectation for investments in storage and compute. And this is certainly one of the drivers of that. Customers don't see their demand or need for storage going down anytime soon. A couple of the other inhibitors on the market growth side. So we've talked about cloud attrition. ODMs, obviously, a stiff competitor in terms of capturing cloud growth, producing low-cost, commoditized, white box hardware for hyperscalers. Supply chain and logistics issues, bottlenecking demand. We certainly are not expecting a quick resolution here. Although most vendors that we've talked about today have not released their Q1 earnings. That's coming up very soon. I think seeing Cisco yesterday was kind of probably a good hint of things to come. Cisco mentioned that their backlog is currently in the billions in terms of both the software they can't deliver because of the hardware that is not available, and the revenue of the hardware that they haven't been able to provide yet. So there's certainly, in addition to challenges faced before, surprises with additional lockdowns in China that have also contributed to some of the challenges there. The last inhibitor we're seeing right now that may or may not change over time, so this is something we're tracking closely in our hardware subscription research, is the progress of channel partners in selling these as-a-service solutions like storage as a service. So we've seen over the last year or two that channel partners have been a little slow to ramp up on selling some of these packaged offerings. There are inhibitors around, obviously, a very long-standing and established mechanism for selling via a CapEx motion. Customers needing to be educated about these offerings, and as well as a few other things. So I would say the channel rollout of these offerings are very critical to the growth and success. And I think depending on how well these channel programs help to enable partners is going to make a big difference there. So that's something we've seen progress a little slower than expected previously, and we're definitely keeping an eye on to see how that changes over time. Just a couple of other things I'll call out from the bottom here. So I think we've talked a little bit about some of these, but on the server side, we see application modernization being a driver of increased server purchasing, as well as private and hybrid cloud deployment. As Jacob mentioned, lots of new products focused on targeting telecom customers specifically and supporting 5G rollouts, as well as demand from CSP customers. On the storage side, we've talked a little bit about increasing public cloud alliances, but we've certainly seen many examples of this. Some more long-standing relationships you see, such as NetApp's long-standing relationships with Microsoft Azure and AWS. Dell Technologies World 2 weeks ago, you saw plenty of discussion around Project Alpine, as well as some of the offerings that are already available on AWS, which will be expanding into Microsoft Azure as well. So certainly expecting continued activity in that space. We've seen, again, a lot of traction with sort of the service offerings, the security in terms of data protection offerings. Another big area that's come up in our customer research, which we'll be launching next week, in terms of strategic priorities for the next 2 years, the security tops the list for all of our respondents, from small business to large enterprise. It's definitely a challenge that has grown significantly since the start of the pandemic. So we expect to see more there as well. So with that, if there are any questions from the audience, feel free to add them in the chat now. And if you are typing a question in the meantime, I will just take a minute or two to kind of review some of the related research that you might be interested in grabbing from the TBR client portal. So as we've discussed, there are 2 key pieces of research that contributed to the slides we saw today: the IT infrastructure market forecast, as well as the IT infrastructure benchmark. A couple of other research items we had mentioned today: our hardware subscription services market landscape, which looks at all of the as-a-service offerings in this IT infrastructure space, so HPE GreenLake, Dell Technologies Apex, and the like. All of them covered, profiled in that research, and our own forecasts and estimates on how that market is growing. Similarly, we have similar content looking at enterprise edge compute as well. Coverage of the vendors that we've talked about today in our reports and profiles. And really something we're very excited about is the infrastructure strategy customer research, which we'll be publishing next Wednesday. And this research is focused on profiling what customers really, how they're focusing on their own IT infrastructure. What is their strategy for their data centers? How are they thinking about edge, compute, and hybrid cloud? And how their investments and priorities are changing over time. So a very focused piece in terms of looking at the strategy and priorities as they relate to buyers' own infrastructure, and that looks at customers from small business all the way up to enterprise in 6 different industry verticals as well. So we'll be excited to share the results of that research very soon. So again, just would love to extend my thanks to everyone who joined today. You're certainly welcome to reach out to myself or Jacob if you'd like to discuss any of these topics further or have other questions for us. We're happy to engage with you all. So thanks again.
All right, everyone. Thank you, Angela. Thank you, Jacob. Like Angela said, please feel free to reach out to the team with any questions that come up. If you have a few moments, it would be super appreciated if you could fill out the survey that's going to pop up on your screen. A replay version of the webcast will be available after the event and will be sent out to all of you via email. To view a list of our upcoming and past webinars, you can visit tbri.com, and be sure to join us on Thursday, June 9th for the pandemic's lasting impact on IT services, who's leading through 2022 and beyond. Thank you all, and have a great rest of your day.
Thanks, everyone.